Right, so what I want to show you here is when we are in a real tight range, and we're going to be in a tight range today and probably tomorrow, right, before the Fed, right? The best trades are actually going to come at about 6 a.m. on Thursday morning, right, when the institutionals decide to put their money in. As it is now, people are consolidating. You can still make decent money out of this because there has been one trade, two trade, free trade, and then free to the short. But what you need to do is you need to use the price retracement tool. So I'm going to start from scratch on the price retracement tool. Price retracement tool is found on the tool menu, and it is there. I'm going to take the bottom of this rotation. I'm going to take the top of this rotation. Now, obviously, when you're there, you take it there. When you move it up, you put it there, right? That's what we're rotating in. Now, I'm going to set this to be reversal areas, right? And looking at your chart properties, the reversal areas that I have set are 23% on the top, right? And 77% on the bottom. So basically what I mean is I'm not going to take, right, any, and it's actually I've drawn it the wrong way, so I'll just draw it the right way, which is obviously helpful. I'm not going to short unless I'm in this box here. And I'm not going to go long unless I'm in this box here. Right, VAH now, because we've broke out of it, is the support. Right, you can see there, that's where the high volumes come in. So basically, short from here, long from here. Do not short here. Do not go long up here. Because what you've got to say to yourself is what am I risking? We're not breakout traders, right? Breakout traders get annihilated 90% of the time. 10% of the time, they're going to be right? And they're going to get decent trades, right? But that's not actually how we trade here. So by just taking the top 20% and the bottom 20%, you are keeping your risk down, right? And you're keeping the higher probability of actually the trade following through. So I'm just going to mark out where I would not short on here, just to give you an example. I would not short there because of that buying candle, right? It's not going to break out. I would not short here. I would go long. And the same here. And when we see these shorts up here, because we're in such a tight market, you've got to make a decision quick. It's the second to the third candle. Because, and I'm just going to show you something else here as well that is of use, yeah? We're just going to zoom in on this, this swing here. So we take this swing here. And I'm just going to show you the percentages so you can see them. So you've got the 30 and the 70. So basically, that line is 30% and that line is 30%. Right. If you wait to the third candle, you are nearly at 50% of the swing. Right. The job of us scalping is to capture as much of the swing as possible. So in this instance, it's actually higher risk to enter here than to enter here on the short. Now, obviously, when you're entering here, what you need to look at is obviously what's happening with the stack, what's happening with RVB, and what's happening with the ratio. That gives you the confirmation really quickly. But literally, once you pass this line, right, you should not be shorting. Once you pass this line, you should not be going long. Because if we take the bottom of this swing, right, and we go to 50% on this here, you've got a potential of 2.5 points. Well, you're not going to capture that because you're not going to capture it right there. So if you mean revert, you could end up potentially losing. Now, obviously, if you enter here, which is a perfect entry for a long because you've got confirmation of heavy buying in that candle, you're almost definitely going to get your 1.75. and you're risking potentially 2.5. But you obviously then potentially can get a little bit more out of it. Now, whilst we've been on, obviously, a point to note is this, right? And we're going to keep an eye on this, right? If we look at this here, we're going to extend this out. That has just broken it. It's broken it by 25 cents. And that's sellers in the candle because you can see it says minus 500. Now, would I short there? No, not at all. On the face of it, you might think, oh, it's going to break out and go down to here. Yes, it might. But you can see there are buyers fighting in that candle. It's flicking between blue and pink. So in that instance, remember what I said? This is what I want to see. I want to see this. A break, and then a bring back, and then there. And if we're really safe, that's really where I want to be entering. The break of this swing. Now remember, the job of a swing is this, right? The job of this swing is to break this swing. The job of this swing is to break this swing. So this swing here has not broken up higher, right? So at the moment, we are coming down. The job of this swing has now been done. It has broken that swing. So technically, we are more bearish, right? But we're in a tight range. Each time this has rotated 8 points, 5.5 points, 3.5. So now what we really want to see is this expanding. We want to see expanding pivots to get involved. Now, the question I will be asking here is where have we seen support? Well, always look left for support. This is where we've seen support. Now, do we instigate a trade at POC? No. We never instigate a trade at POC. That is our point of reference for a target, because POC is pretty much like gambling. So what we want to see though at POC is this. We want to see what it does. It will either bounce off this or pierce through it. So if it bounces and then does this, as an example, so we come down, then I'd be interested in getting involved there, not here. Because and then we would risk off that. Because you can quite clearly see we have actually got support there. We've got buying support. But personally, realistically, in this instance, I'd rather it come down to value low and take a reaction off that. It's a far better trade there. This is a bad trade. This is like, if you're grading your trades, this is on a rotational day, this is an A-star setup. This is a C at best. So hopefully that's helped you with just looking at your entries. And I'll just clear this off. Have you got any questions on that?
No.
Just looking at your trade entries, yeah? I'd say you're putting a little bit too much emphasis on this and not enough on structure. Structure's here and here. And obviously that's your middle. And if we just move back, yeah. This morning we had some really good trades off VAL. Obviously you're in your lectures then, but obviously it is what it is. But we got some really good trades there. But again, the shorts didn't play out. You're down here, you can't short into these support levels. It's a good example. So then we saw this short here. But this is a really good example, Ben, of what I wanted to show you about POC. People think, oh, we're at POC, right, great, we can trade. It's a magnet to a target. You see there? Got a short signal there. You got eaten alive. And it literally, you'd have been stopped out on that. You might have got a few points, but that's not what we want to trade in. This is so much cleaner. You see the difference between coming off this level to coming off this level.